And welcome to the Short Vol Show Live. So I was sitting there with a laptop this morning. I spilled coffee all over my laptop. And it's like every time I press the L button, it like resets the screen. So I was trying to type, and I would have to hit Control C and copy an L somewhere else on the page to put an L when typing this morning. So my screen wouldn't reset. So it was a little bit of a mess. Anyway, so I'm coming on with a couple announcements and just to talk about a couple things as we move into the week. First of them is I'm attempting to start having a regular schedule of coming on Monday, Wednesday, and Fridays at 9 a.m. And we'll see how that goes. Second of all, I don't want to waste your time, so let's go through this real quickly. And I know that sounds kind of silly after playing music for like a couple minutes, but that's just kind of the format. I might put a link to like where the videos actually start down below or something like that, or either that or just cut out the music when this gets posted for real after it's live. But anyways, let's get into the market and what's going on. We do have a down move over the from Sunday night, and it's kind of gotten, it's extended itself. I know when I looked last night, we were down 18 in the E-minis. Now we're down 35. I've been watching on TV some of this YouTube channel, CoffeeZilla, where they talk about fake gurus, and it talks about stock market fake gurus. And there are a lot of people out there that are pitching about the stock market that have a lot more views than I do, and at times it's kind of frustrating for me because these guys they're making a ton of money. They appear so successful. Some of the people I'm talking about are like Warrior Trading or Ricky Gutierrez, and these people profess to like have the formula for how you can make lots of money, and they seem to be selling these courses of like, how do you figure out, you look at a chart. These guys seem to look at a chart and somehow figure out which way the market's going to go from that chart and make money all the time. And this CoffeeZilla channel has kind of debunked a lot of these guys, and it just isn't true. I've been approached to, sell classes for $1,000, how to get rich in the stock market, and use my name to kind of convince people to buy these expensive classes. The truth of the matter is that it's not easy to make money trading, and thus I'm not interested in making some fake thing as a money grab. So I'm not going to do that. So let's get into this week. A couple points I want to make about this week. First of all, the term structure, the VIX term structure, is in a kind of precarious shape in that a lot of times when we talk about the VIX term structure, I talk about there being a cushion there for you where, well, if we get a spike, UVXY and VXX are not going to perform very well to the upside because there's a big distance between spot and the futures. Well, there is no cushion anymore. Right now we're in backwardation and we are inverted. If you don't know what that means, let's take a look. What's up, Manfred? If you don't know what that means, let's take a look at the term structure. And essentially, if we get a spike right now, these products, UVXY and VXX, are going to fly. Any sort of up move in the VIX is going to force these products higher. And the reason for that is that there is no cushion. In fact, the spot VIX is already higher than all the futures at the moment. And even if it wasn't, or let's just leave it at that. Spot VIX is inverted at the moment, and thus any more move to the upside in the VIX, the futures, which are what make up, of course, UVXY and VXX, are compelled to move higher. There's no cushion here, so we are set up for a possible spike where these products get up and go. Let me get out of the way here. So here's the term structure. Let's see if I can pull it up slightly so that you can see. So we're showing in backwardation by 1% here. And if you notice this amount of backwardation, the slope between November and December has actually gone down, and I think that's going to continue. I think obviously right now we're in the midst of a little down move today, but that probably won't last forever. We'll have up days coming again soon in the market, and the spot will go back below these futures. But it seems to me like regardless of anything that happens, stuff goes back into Contango, over a small period of time. And it looks like we could see this November-December relationship go into Contango this week sometime. The relationship is flattened out. There's pressure on Nov to go lower versus December, and we could see that start to happen again. And then we might play that game where we watch, okay, now Contango percent goes from negative 1% where it is right now, back to even, to 1% to 2%. It looks like that is going to happen despite predictions that we stay in backwardation till the election. It looks like we might go back into Contango at some point here. The market seems to be focused on, for a long time, the market has been, it appears it's been focused on a lot on the U.S. elections coming up, but the COVID situation has become more and more dire over the last couple weeks, and it appears to be weighing on the market, which sort of makes sense. Certainly in the state I'm in Massachusetts in the United States, and our new cases in COVID was down to like 200 a day a month ago, and now it's back over 1,000 new cases a day. And in fact, stuff has been moving up. I know you've probably watched this. It's been reported all over the place. I'll show you where I go to look at the COVID reporting. Is this chart down here, worldmeters.info. Let me show you if I get out of the way here for a second. Here's the URL, worldmeters.info. And I go here, and then I just look up. Sorry, there you go. I go here and scroll down, and I just look up. You can go to the U.S., and then you go to yesterday, and it shows you the totals. Here it's showing 60,000. Now, we're not sure if these numbers are real. There's been reported in the media that Florida is not giving the right numbers, et cetera, et cetera. But I look at Massachusetts, and I see we're over 1,000, so that's kind of scary. Now, certainly, the hospitals have learned to deal with COVID a lot better, and the mortality rates are way lower than they were before. So before in Massachusetts, when this thing first hit, we have one of the higher mortality rates. Now, the percentage of people that actually pass away once they're hospitalized is way lower. So, 1,000 new cases in Massachusetts means less death now than it did at the beginning of the crisis. But still, these numbers are scary. I think it was over 80,000 new cases at one point. We don't know exactly what it means. It kind of depends on your political affiliation, what you think of this, but it is out there. And we do have the E-minis down 34 right now, with the VIX up to 29 and change. If we go back and look at UVXY over the last few sessions, you can see we've been bouncing in this area here, and I just want to caution people to be careful. Now, there's a couple ways of interpreting the chart, and one of the ways is, and I put up a poll because I'm interested in what you have to say about this, but I'm considering going short volatility into the election, and not doing that by being short naked options, but rather by buying either puts or put spreads kind of far out in VXX. So if we go back to the charts here, sorry, I keep bouncing back and forth between these charts and whatnot. If we go back through the charts here, you can see kind of the sideways action in UVXY over the last few sessions. Now, the position I have on right now, and my main focus right now with my position in UVXY, I'm short the 45 calls. Okay, UVXY is around $17 now. Even with this mini spike, we're around 17.40. I'm short the 45 calls, so it has to sort of triple for these calls to be in the money. And my strategy now is to, which is very hard for me as a trader, is to just leave it, right? I get in there and I want to, like, fine tune my position. Say, oh, well, instead of being short the 45 calls in November, maybe I should be short the 55 calls in December. Let's do that. And then I switch it. And then, oh, well, maybe I want to buy a couple, I have some extra buying power. Maybe I should buy a couple VXX puts, and I switch it. And the thing is, each time you switch stuff around, it's costing you money. And it may not be a lot. Everybody has different rates for what they pay for commissions. But I was noticing that if I'm trading 30 contracts a day, right now my decay for my position, if we go to the Analyze tab in Thinkorswim, right now the decay for my position is $50 a day. I'm collecting $50 a day in decay. Now, if I go and I switch stuff around and I trade 50 contracts today, that's going to eat into that $50 in decay, in theta that I'm collecting. And, even if you're paying, let's say you're paying 25 cents a contract to trade options. All right, you're giving up a quarter of the decay you're collecting a day, switching stuff around. So I'm challenging myself to just leave it. Maybe, the D50s are a better sale than the no 45s, but once I've switched everything around back and forth 10 times, I've lost whatever that extra little money is. And remember, when you have a position like this where I'm collecting theta every day, you have to factor in that there's going to be, at some point, a spike where you're going to lose some of that money. So it's not like I'm just collecting $50 a day and that's just money in the bank that I can go spend. That is a buffer against some sort of spike that's going to hit me at some point. And so I need to have that money, put it aside, and not eat into it by trading all the time. So I'm challenging myself for the week to just leave my position. Now, I plan on adjusting this position ahead of the election, but in the meantime, I'm challenging myself to just leave it. And this is a unique way that me as a YouTuber, being a YouTuber, can actually help me, because you can hold me to this. You see my positions. Here's the trades from last week, and I'm just messing with the position over and over again. I sold some puts against it, and why do I want to be selling puts when my strategy is being short this product? Selling puts, it was kind of like a way of a little extra income by selling way out of the money puts that will never, they're very unlikely to actually go in the money. But, that's distracting from the kind of the core principle here, which is to be short the VIX short UVXY in a sensible manner. So you see all these trades that I'm doing where I'm messing with the position. Here's the 23rd, 22nd, trades where I'm just grinding away my profitability. And I noticed that, so I'm just going to leave the position for this week and attempt to not do anything. So let's see how successful I am with this as the week goes by. My plan today is to do nothing. And, in a sense, if UVXY moves up enough, I will run out of buying power and I'll be forced to cover something. But at the moment, I'm not close to that happening. It looks like I have about $1,000 buying power right now. And the market seems to be kind of coming back. We are off the lows a little bit. Let's take a look here right now where we are. So here's the E-minis from last night. If we just look at the last day, and I get out of the way. So this is since 8 since 4 in the morning, kind of moved sideways a little bit. What if we back this out a little bit further? Let's go to the 5-day. All right, so you can see since we reopened Sunday night, the low was around 3 in the morning, and we're kind of bouncing off that now, although it's not clear if we're going to, the trend is lower. So we might make further lows here because we haven't kind of come out of the trend there. I know I preach against technical analysis, but I am looking at a chart right now. So just preaching against technical analysis doesn't mean that you never look at charts, or you don't, you would be crazy to be a trader and not look at some charts at some time. But that doesn't mean that I'm doing candlestick analysis, but I am of course looking at charts at some times, and I know the charts of the products that I'm trading. So my strategy is to just leave the position right now. If you want to see what position I have, I can show you that really quick here, UVXY. And I am short I'm short 12 of the no 45 calls. I'm short 1 D's 58 call, short 1 no 27 no 30 call, and long 1 no of 9 put, which is basically a worthless put, which I bought for I think $3 against something, and that's kind of residual in my position. So I'm short a total of 14 UVXY naked calls, which is a risky position. If this thing spikes to the moon, I could lose everything. However, my risk right now, if we look at it, up 50%, I lose $2,800. Okay, so if we have a 50% up spike, I could lose like a third of my account, and that's that is some real risk, and it certainly could happen. But I'm comfortable with that level right now. All right, so there you have it. That's the basics of what I wanted to tell you today. I would recommend people be careful coming into both the election here and also just this COVID scariness. There's scary news from Europe as well on COVID, and it's time to be careful. But I am considering putting a short position on after the election. Let's go over that really quickly before I get out of here. And we'll go to VXX. Now, the position I had on like a few weeks ago was I was long the March 21 puts. Right now, there's our 460 bid at 480 as we look at the screen here. Now, it could be there's 144 days till March expiration. So if volatility collapses after the election, this option will do okay. It might be a better trade, though, instead of just being straight up long that put, to be long a put spread. And now it limits your downside somewhat, but it limits your how much you have to pay for a day in decay. And there is only a limited amount that VXX is going to go down before March. It's not going to go to 0 by March. Now, the all-time lows in VXX are around 13. Could we make it to the all-time lows? Of course we could. But I'm looking at more of a spread like the 21, maybe the 21.15 spread. So if I were to buy let's switch over to the trade tab here. So if I were to go in VXX and I were to buy the March 21 put, and I were to sell the March, I don't know, let's say 17 put. So pay $2.45 for something that could be worth $4. Now, if you're a fake guru, making a return over a few months of less than like 100% isn't worth your time at all. But if you're us back in the real world here, this would be a great return to risk $2.45 to make $1.55 if we can get to 17 by March. And I think it's fair. it's a very realistic expectation that we could get to 17 by March. So this is the kind of thing I'm looking at. I know one of our viewers was talking about being long. I think the June 12 put or 15 put, and that's certainly possible to make money on this too. Now, just if we just look straight at a break-even number, if we look at the 15 puts in June in VXX, let's just use a round number of $2.50 for this put. That would mean that to break even on this trade at expiration, this would have VXX would have to be below 12.5 by June expiration, by June 18th, and that seems like it seems possible, but it also seems like you got a long way to go. But remember, to make money on this option, you don't have to hold the option till expiration, and this option will go up in value for any down move in VXX, right? And the beauty of buying a put that's farther out in time, this has 235 days to go, is that it doesn't decay very much per day. So you're not fighting the massive levels of decay that you would be fighting if this had like a week to go or a couple weeks to go. Let's just model actually the June 13 put, for example. So if I were to buy the June 13 put, what I'm doing is I'm clicking on the offer in my Thinkorswim, and then I'm going to go down and I'm going to right click on the trade here, and I'm going to go analyze trade. Now if I pull up my tab here just to make sure that that's the only trade in my analyze setup right now, okay, so it's not. So let's delete these other trades from before. It must have been from before I was looking at stuff. All right, so we're looking at the March 14 put. So let's switch that. So we were looking at the June 13 put. So let's just adjust this. I guess I picked the wrong one. VXX June 13 put. I did the wrong year. Okay, so $1.55. So let's say we were to buy 10 of these. So 10 of these would cost $1,500, right? Because they're $155 each. Let's say we bought 25 of these. So what I'm going to do is, so if we own 25 of these, it would cost $17 a day. It, that doesn't sound like a whole lot, and it's not a whole lot, but it is something. Especially right now when we're in a backwardation and we're not really decaying at all. However, this trade would be to try to capitalize on a crush in volatility after the election. So, and we might move up in volatility right before the election here, and there might be an opportunity. This is the kind of trade that you can think about ahead of time. Then if we get a pop, you might be able to enter into this trade for good prices. But let's just go for a second. I'm going to say create duplicate order, and if we're going to see what would happen if we bought 25 of these puts. So I'm going to say confirm and send. Okay, so 25 of these puts would cost $4,000 to put the trade on. And it would cost 17 a day. Now, if we had this trade on, we would effectively be short 300 deltas in VXX. The equivalent of being short 300 shares is a loose way of looking at this delta here. Except for the fact that if a spike comes, we're not actually short the shares, and all we can lose is that $4,000 that we put in. Now, $4,000 sounds like a lot, but it's better than having an infinite possible loss being short naked shares of VXX. So that's why we prefer buying puts or put spreads over shorting the stock. For that reason and other reasons, other reasons being it can be hard to find shares of this to short at times. And you have to put up money to be short the shares as well. That money can be more than the $4,000 to buy the puts. And it's scary going to sleep at night and being naked short shares of something that could spike to the moon. That's a scary, it's better to sleep at night if you know, well, the most I can lose is $4,000. And this is not an all or nothing proposition with the $4,000. You could go tomorrow and sell these back out. It's not like you put the puts on and you're stuck till expiration and you either win or lose. No, you could adjust this over time as, whenever you felt like it, which is a good difference. All right, so this would cost 17 a day. Now, 17 a day is something, but it's not a huge amount of decay. My position right now is collecting $50 a day. If I had the opposite position on it, it would be costing me $50 a day to be long 14 calls in UVXY. So my question to you is, would you consider putting this position on going into the election? I think it might make sense, and I'm considering doing it myself, but I'm interested to hear what you guys have to say about that. Thanks for all the new viewers who've been checking in with me and who've reached out to me on Twitter and whatnot. I really appreciate the support. Check out that CoffeeZilla channel on YouTube where they talk about the fake gurus. It's pretty interesting stuff. It actually makes me feel better to see him highlight some of these Forex and stock market fake gurus, because when you look at the top YouTubers in the stock market space, they're all fake, and it's crazy. I would love to become somebody who's more well known on YouTube who is actually real, but it's harder to get views when you're real, it seems like. All right, so there we go. Thanks for watching, and I'll check you back in with you next time on the Short Vol Show Live, which will be Wednesday morning at 9 o'clock. So we'll see you all then, and until then, best of luck to you. Be careful in this environment. This market has the potential to spike, and if you're, you should have a plan for what you'll do when and if the market spikes, and you should protect yourself against getting hurt in that situation. But right now, the term structure is in a precarious shape. Be aware of that. But I do see us possibly rolling into Contango if nothing sort of drastic happens in the next week or two. I can see November-December relationship rolling into Contango just due to the pressure of the market. I know it doesn't make sense in like a logical way, but when these funds have to keep rolling, they have to keep selling November and buying December, it forces the relationship into Contango at some point. So we'll see if that happens. In the meantime, thanks for watching, and we'll see you next time. You're watching Famous Dave. Bye now.